Hi, everyone. I'm Steve Altition, Director of Client Partnerships here at Pacific Cascade Legal. And today we have Tax Debt Resolution Specialist Morgan Anderson to talk about taxes and divorce. An ounce of prevention is worth a pound of cure. So, Morgan, before we start in, do you want to talk a little bit about yourself and what you're doing and how you came to be, you know, a a prevention and a debt resolution expert?
Yeah, great. Thank you for having me here, Steve. I really appreciate it. I am on a mission to help people ease their anxiety when it comes to dealing with taxes. And boy, there is no more heightened anxiety level than dealing with divorce and then taxes and how it all comes into play. So I appreciate you inviting me to come and chat with you and your listeners today about all of this.
Oh,
I have,
thank you for coming.
yeah, oh, thank you. Thank you.
It-
I have
yeah.
spent the last 26 years focused on nothing but tax debt resolution. That's all I do. And that's all we do at my firm. And I've had the opportunity over the decades and a half to think about how we can get the message out there to prevent problems, especially in cases of divorce. Because as you alluded in the title of this episode, just using some foresight, thinking about things as you're going through the negotiations of a divorce will help you stay steps ahead when it comes to the tax consequences, or dealing with a tax debt and then going into a divorce, how you can force the envelope on that topic before the ink even gets put on paper about a negotiation through the divorce. Because you want to make sure and stay 10 steps ahead of the tax agencies. So, foresight is really important when it comes to these matters.
Oh, I love that. Staying ahead of the tax agency. I'm going to use that one. Um, so I kind of what this ounce of prevention. Um, in that prevention, I mean, it seems like it's possible that that can even start before you file it for the divorce. And what are some things maybe even before you file, or even sure you want to file, that you might want to think about?
Well, first and foremost, are there any debts already on record? Because if there are, you want to make sure and handle them before you start talking about separation, before you start saying, this is mine, this is yours. Because over the time that I've been focused on tax debt resolution, I have had countless number of clients come to me and say, hey, my ex-spouse and I had tax debt. We went through negotiations with attorneys. We have a divorce decree, and my ex spouse assumed responsibility for the debt, but the IRS is coming after me. Why is this happening? And it's because when you are filing married filing joint with somebody else, you are acknowledging to our federal government that both parties on that tax return are equally responsible for the debt. Not that it's separated, and not if something happens in the future and we terminate the marriage, then one party or another is going to assume responsibility. In the eyes of the federal government, you're both equally responsible. So knowing that, when you are heading down the path of dealing with a divorce, you want to make sure that any tax debt is considered and that you have a plan in place before separation of assets or separation of any financial situations.
It we get a lot of cases where divorces um, are coming, and I believe that, tell me if I'm right, is that divorce needs to be finalized. Otherwise, you got to, file as a married couple. And can that ever be an issue to look at? Because some divorces may only take a month or two, and some may take 10 months or longer. Can that become a factor of deciding, almost a timing thing? When should I file? Because I think the divorce has to be finalized, doesn't it?
Correct, correct. If you're still legally married on December 31st, you will want to speak with a tax expert, because you could do married filing separate, but there are consequences to making that choice. The considerations you get for standard deductions, more and more people are using standard deductions now versus itemizing, because they keep increasing the deduction given. So people aren't using Schedule A, where you itemize your deductions, as much as they were 5 years ago. So you want to keep in mind, what does married filing separate do to the tax allowances and the deductions that you get to claim? But if not, if you're married filing joint, you're both signing responsibility for that tax return if you're still married on December 31st and you're filing married filing joint.
And I guess that could be, a good thing or a bad thing, just depending on your situation.
Depending on the situation. And that's the hard part about speaking in generalities about divorce and taxes, is because everybody's financial condition is unique. As you've seen in your practice, every client that comes through your doors, I'm sure, has a different situation than the one before it and the one after.
Is there any way, and to a spouse might not know there's unreported income, either
Absolutely.
before they file or as they start to negotiate? Is there ways they can find that out? Is that something that should be considered and looked at?
It depends on the integrity of the spouse you're filing with. It really does. And their understanding of their financial transactions, right? We've had a lot of circumstances, or a lot of instances of clients who come to us with circumstances where they've filed married filing joint with an ex-spouse, and the ex-spouse had a business, Schedule C, or they had a flow through entity that was reporting distributions and income to them. And then inevitably, a few years later, there's an audit of that entity. And it is found that changes need to be made, which then flow through to the joint income tax. So you can claim innocent spouse in those circumstances where you say, hey, I filed married filing joint with this other individual at the time. We're since divorced. I had no way of knowing that there were any questionable items on the income that they reported from their business venture. So I had no way of even knowing that there was something underreported or deductions were claimed that couldn't be. So that's why the IRS and most states now have an innocent spouse program.
Do you have to file, or should you file for innocent spouse right away? My kind of thought was, a lot of stuff starts to become known that wasn't known in the initial discovery in a divorce. And let's say you find out these things that happen, and now they happen. Um, is it better to file then, or just sort of wait, or does waiting kind of make you not so innocent?
Right. That is a great question. And technically, unless there is a debt owed, you can't file innocent spouse when there's no debt of consequence at the time. It, and that brings up a sticky, like, whistleblower situation.
Yeah.
It's a great question. I've not had that instance come up in 26 years of handling client cases, but it is a great question. I'll have to do some more digging and get back to you on that because
Yeah.
you can tap the whistleblower program and say, hey, I'm getting a divorce. In discovery, we got my ex-spouses or soon to be ex-spouses records, and something isn't adding up. But the question is, what does making that move mean to the divorce and the negotiations that you're going into? I mean, as you know, there are some very contentious divorce that occur.
Yeah.
Are you throwing fuel on the fire? Are you being a good citizen by reporting to the federal government that there's something hinky happening with your ex-spouse's business? I don't know. I don't know. I think first it would be look at the circumstances with your attorney and have them weigh pros and cons with you of making any move with a whistleblower program.
Right.
Because I'm not sure if you want to get that sticky in the
Yeah.
situation.
If you do know, excuse me, if there is a debt and they're out there before,
Mhm.
um, is your part in taking some of the property going to relieve you of having to worry about that property? Um, so if they come in and they say like to you, there's this debt that we have, or maybe just the debt that he has. And what we're going to do is we're going to shift the property so that, I don't have to, or he doesn't have to pay it. And, or is that debt not, not able to be split up as far as the IRS is concerned?
Let's break that down a little bit more, okay? Because
That's a lot.
there's a lot of questions there. So, as with anything with taxes, strategy can come into play. There's nothing nefarious or cloak and dagger about strategizing in the best way possible. And that's why I say, if you're heading down the path of divorce, have the tax debts brought into consideration and an exit strategy for them at the beginning of the divorce negotiations, because you want a clear path of who's going to be left holding the bag.
Right.
If it is one spouse or the other responsible for the debt, make sure that everybody is aware of that. Because if you file innocent spouse request with the IRS or with the states, they do notify the other party. Want to let you know your ex-spouse filed innocent spouse, and we may submit a questionnaire to you asking for your side of the story. And this is why having a tax debt plan as part of the negotiations is so crucial. Okay. Because after the divorce is done, after all the negotiations are made, either party can throw the other one under the bus.
Yeah.
And you want to keep integrity with everything you're doing with the IRS and with the states when it comes to tax debt, because it gets really icky. And I apologize. We had so many questions. I wanted to start breaking it into components. Can you go back and repeat again the direction we were heading with this? Because I
just sort of like if you know you have a tax debt,
mm-hmm.
you have a tax debt, and maybe there's no innocent spouse, there's no intent to be innocent spouse, but you design something, you pay the taxes, and I get this, and you get that.
Yes.
And that person doesn't pay them. I mean, it seems like it's got to be tough. Do you just trust them to pay?
Well,
How do you
so
work with them?
yes, and this is a great thread to head down for us. From the federal position, okay, when you're dealing with the IRS, separation of or assignment of responsibility through the divorce is a non-factor for the government, for the federal government. They will say, hey, you know what? That is nice that you have that assignment of responsibility at the civil level, but this is a federal matter. So while you have this agreement amongst the two of you, we don't recognize it officially. So both parties will still be sought for joint tax debt. Now, aside from innocent spouse situations, which we touched on, right? Let's say they're both equally responsible.
Yeah.
And in the divorce decree, let's say spouse B is going to take responsibility, but then, as you alluded to, spouse B doesn't reply to the IRS. And the IRS starts going after spouse A. Spouse A has no defendability based on that civil agreement, which is why I'm a huge proponent of setting up a solution to address the tax debt before the divorce is finalized. And if it is a responsibility tied to monthly payments, that there is some type of assurance in the divorce decree that accommodates what happens if spouse B stops making the payments.
Right.
Because that type of protection in the divorce decree is going to protect spouse A and their interest.
Is it wise, or can it be wise, or do you ever advise if coming out of a divorce, a lot of the things are retirement accounts and things like that, and do you kind of go through the numbers of, okay, you can take this IRA or this Roth or this 401k, and you can use it and pay them off now. And then if you do, this is your consequences. But does that kind of ever factor in, is actually to take some of the property and just say, you know what, the house, let's just sell it and use it to pay the debt?
Yes, absolutely. Absolutely. And the reason why is both parties may leave the marriage with less assets or less equity than they had wanted, but they're out from under the tax issue. Mm-hmm. Remember, tax debts, if it's over, I believe the threshold the IRS has right now is $63,000. Tax liens will be filed. So if the debt was significant enough, let's say there is a tax lien on the property, before the property can be sold, that lien has to be dealt with anyway.
Again, it's the ounce of prevention, and so people don't just have to come to you with after they have liens on it. If they know they've got a debt, and they can come to you and kind of say, okay, how do we get out of this the best way?
Absolutely. Absolutely. Whenever we have a new client come to us, we do an investigation before committing to a resolution strategy, because the investigation lets us put all the pieces of the puzzle together. Same thing that you do when a client comes to you and says, I want a divorce. You say, okay, let's start putting all the pieces of the puzzle together to know what we're dealing with here. That's the same thing that we do. We call the IRS, we call the state, get all the debt factors from them, copies of all the account transcripts, and we go through the client's financial condition and put the pieces of the puzzle together to say, here is the best way to leverage any assets or equity that you have available now and your financial picture. This is how we leverage it to have the best income possible for you. And it is so important. A divorcing couple who are jointly responsible for a tax debt understand that, yes, you may be throwing daggers at each other across a board table, right? But in the eyes of the federal government, you are both equally responsible for this debt. So let's deal with it now before anything else continues.
And what I like is, I'm assuming you you create a plan, and that plan goes into the decree. Because I think you said earlier, if it's not in the decree, it's, especially not only is IRS not going to, enforce it, the state judges might not enforce it if it doesn't, this doesn't go into the decree.
Correct.
Yeah. Um, okay, we talked about this just a little bit before we got on. There also, at least to me from the divorce side, is I want to say preventing the debt, but there are certain things that if you take, you're taking on a potential tax debt. And what are, some of the things to be aware of, like, oh God, I want that.
Right.
Or I want that, even though there may be not yet a tax debt, you know, there will be one, very soon, maybe.
Correct. Correct. Well, we were speaking about the property, the house,
Yeah.
right? So there are um, deduction limits based on married filing joint versus married filing separate. So capital gains on your residence, for example.
Yeah.
Let's talk about that. If you liquidate a property in the year that you're still married, you get the $500,000 married filing joint capital gain exclusion. But let's say you don't. And then 2 or 3 years after the divorce is finalized and spouse A got the marital home and then wants to sell it, what happens? They're only allowed a $250,000 capital gain deduction. So using foresight and planning, you can make sure you're maximizing the distribution or separation or liquidation of assets prior to everything being finalized with the divorce.
Yeah. And that would make some people pause if a decree said something like, okay, what I'm doing as judge is I'm going to order you guys to sell the house
Mm-hmm.
and to split the property, and if you want to do it after the divorce, but that's what you have to do. You have 2 years to do it, something like that. And the people go, oh, great, not realizing just what you said. The divorce is actually over when they're actually sold. So no matter what the judge said, again, IRS steps in on that.
Absolutely. Absolutely. It's so important when you're making these big life decisions. It's all very emotional, right?
Yeah.
But you have to put the emotion aside and look at everything from a business perspective. You're the company, right? You're the company. You're looking at these assets. You want to make strategic tax moves. Don't just speak with your attorney, speak with your trusted tax professional. Speak with your financial advisor. Okay, we're looking at, this is the picture of the couple, right? The financial picture. What are the short-term and long-term consequences of any division of these assets? It's so important to slow down and do that due diligence, because then you make sure that things remain equitable through the negotiations. You're not going to end up being stuck with a tax consequence that you couldn't see during the negotiations. So
Yeah.
tap your board of directors around you, your financial advisor, your tax professional, and your attorney, and put everybody together and say, okay, what are the short-term effects of everything that we're looking at, and what are the long-term?
Yeah.
Because marrying all those different layers of vision for any moves that you make is just going to help you strategize in the best way possible.
It, it, part of that Does part of that include even things like I wouldn't even have thought of this is like the tax bases of some things. I mean, if you had Amazon at in 2000,
Which
and
we all
that's
wish we did.
yeah, and that's the split. I
Right,
mean, wow,
right,
you're going to sell
right.
it and have a giant tax as opposed to maybe something you just bought. And so
Right.
it's really interesting.
It is. And that's why think of yourself as a business and pull on your board of directors to sit down and say, okay, short term and long term consequences of all of these potential moves.
Yep. And what about your withholdings and kind of adjusting at it's sort of like after the divorce. It
Mhm.
seems like you're saying you need to prepare for that too, and not just in what you split, but like how you're going to file, how you're going to you know change your different withhold, all of that stuff. Does that all
Right.
have to be kind of, or should it be looked at?
Absolutely. An ounce of prevention. It really does. And I know when people are going through divorce, it is all consuming. And sometimes it's all you can do to get up and brush your teeth and face the day with it. It takes all of your inner strength. However, it is a long process, as we touched on earlier. And you're going to have ebbs and flows through it emotionally, physically, mentally. At some point, and the earlier in the process, the better, that you sit down with your board of directors, again, your financial team, and say, okay, where is this going to put me? Long-term vision, short-term vision, and long-term vision.
Yep.
It is so important that you rely on these trusted professionals. And a lot of times in a divorce, the couple has been using the same financial advisor and the same CPA. If you find yourself in a situation where you don't feel comfortable continuing that relationship, making that decision as early as possible and finding alternates is going to be key.
Yeah.
Because as much as somebody has a relationship with their CPA, if the ex-spouse has a business and they use that CPA for their business and their partners use that person,
Yep.
as much as a professional is going to say, hey, there's separation here, I'm okay with it, it creates a sticky situation. It is
Yeah.
best to find your own people.
Yep. I get that. I get that. I mean, and it can be again sort of an innocent thing. I mean, well, if you do this, your business is going to have these negative things.
Mhm.
But your personal stuff will have positive things. And there's, like you said, there's so many things to weigh. And they can someone come into you again before the divorce and say, we have this debt, and when should we start contacting other people?
Absolutely. Absolutely. It's never too early to start looking at everything from all kinds of different angles.
Yeah.
I liken it to flipping a Rubik's cube and finding somebody to stand there with you and say, okay, well, what if we turn it this way? What if we flip it this way? What does that look like? Um, it, the earlier you can start getting some good perspective on the
Yeah.
situation and start mapping out solution paths, the better.
Oh my God. So if I do come to you, do you also get involved with like our attorneys? Is this part of actually doing the official negotiation of the divorce? Um, do they do they get sort of involved at all, or are they kind of on the outside of it?
So there are two different ways that we become involved in a divorce situation. One is we are a third party that works only with the attorneys on both sides for the
Oh,
sole purpose of resolving the debt. It's a
yeah.
debt exit strategy. And We don't have any communications with the clients themselves because both sides agree that this debt needs to be addressed, and we address it via the attorneys. So
I,
that is one way that we become involved. And the other way we become involved is if one spouse will only agree to addressing the tax debt, then we become involved with that spouse. We are an advocate directly of theirs, and we work with their attorney team.
wow.
So
Wow. We
yeah,
just
you
blew through
really want
30.
us doing it from working with both sides from a
Yep.
removed position. But if you have an uncooperative ex-spouse, no problem.
Yep.
Yeah.
I love that. We just, like I said, we just blew through 30 minutes. So
Wow.
unfortunately, we're, out of time. But before we go, Morgan, can you
Yes.
let people know how to get a hold of you?
Sure. Let your fingers do the walking. Find us on Google. Look me up. We're all over social media. We have a beautiful website, Golden Lion Tax. Give me a call. My direct phone number and email are on our website. I am happy to speak with anybody, even if it's not so much we have a huge tax debt right now that needs to be addressed, but I fear that something is coming down the pipeline.
Yeah,
I am happy to spend any time that someone needs to point them even in just the right direction if it's not dealing with tax debt with something that we would get involved with.
I love it. I love it. Well, thank you so much for being here today. Yeah, talking
Thank
about
you for
taxes and
having
divorce.
me.
Boy, what is it? Taxes, divorce, and death. Those are the three.
Right.
So thanks so much. It really, really helps. And I encourage anyone to get a hold of you if there's these issues. So Morgan, thanks for coming again.
Thank you, Steve. Thank you so much.
And everyone else, thank you for joining us today. If anyone has any further questions on the topic, post it here. We can get you connected with Morgan. You can contact her yourself. Until next time,